Hi there, very good afternoon. Welcome back to ET. Now you're watching Market Fatafat with me, Ganeshka Sarkar and Anita Saxena. This is a show where we'll take you through all of the stocks that are buzzing in trade today, either on the back of news flow or on the back of technicals. But before that, a quick look at how the markets are faring. And Ankita, it's a rather decent day. We have seen quite a bit of recovery. In fact, the Nifty is trading at the day's highest point right now. But the standout today is definitely Nifty Bank.
Absolutely, Kanishka. Like you mentioned, the recovery. We are recovering on all accounts right now. In fact, if we had a tepid start, we had a gap down opening, but we have managed to recover. And I remember it's also, the weekly expiry for Nifty. So there is bound to be some volatility. We have recovered 160 odd points from the day's lows on the Nifty. We are nonetheless trading in the red with cuts of 0.2%. But Nifty Bank has posted a smarter recovery. In fact, we are up almost 385 points from the day's lows on Nifty Bank. We are now comfortably in the green, trading with gains of 78 odd points on Nifty Bank as of now. We are at the highest point of the day as far as Nifty Bank is concerned. In fact, speaking of the banking names, it's the PSU Bank that is firing on all cylinders. That's trading up 1.3%. Canara Bank, that's up 2.2%. The Bank of India, Indian Bank, PNB, UCO Bank, Bank of Maharashtra, Union Bank, all of these are trading with gains of 1+%. So PSU Bank is really what is holding the fort right now. And on the losing side, we have Nifty IT that we see profit booking coming in on after those days of advances on the back of a weak rupee. But that's how the construct of the market looks like as of now, Kanishka. Let's move on and get on board Osho Krishnan, who's the Chief Manager, Technical and Derivative Research, Angel One now, who's joining us on the technicals. Hi, Osho. Thank you so much for joining us today. Let's get going with all the stocks that are in focus today. First up is Apollo Microsystems that is in focus because the company has recently announced a signing of an MOU with the government of Telangana. Under this MOU, the defense and the aerospace technology company, along with its subsidiaries and steps down subsidiaries, will be setting up a greenfield project in Telangana. And the proposed project has an estimated investment of approximately 1,500 crore rupees. And it is aimed at expanding the company's manufacturing and explosive filing capabilities. On the back of this MOU win, Apollo is in focus today. Given the construct of the market, even Apollo Micro is declining in trade, reeling under selling pressure with cuts of 3%.
That's right. Despite that expansion plan that has been announced, the stock is reeling under some pressure on the back of a weaker market. But let's move on and get you another stock that is in focus. Osho, you've picked out CDSL for us. Now, this capital market play, very muted trade it has seen in the past month or so. But from here on, where do you see the stock headed? What are the charts suggesting?
Very good afternoon, Kanishka, and very good afternoon to you, Ankita. Well, overall, we have seen that the capital market related counters have seen some kind of traction, but in the recent period, CDSL specifically have seen a correction from 1640 towards 1500 odd levels now. So I'm expecting, as looking at the historical trends, the zone of 1480, 1470 has cushioned the counter multiple times. So I'm expecting this time also there is high possibility of a reversal in the counter. On the higher end, again 1600 to 1640 will be the short-term target, and on the lower end 1470 to 1460 is a very strong support levels for CDSL. So for short-term duration, one can look for accumulation purpose for target of 1600 to 1640 in CDSL.
All right, 1600 to 1640, that's the target for the short term for CDSL. But let's move on and get you the latest on Indigo. Now, this one yet again remains in focus. This after the DGCA has directed the airline to cut 5% of its flight slots in the winter schedule. That's roughly 100 flights per day. Now, remember, this comes after a major operational meltdown where Indigo cancelled more than 4,200 flights in just 8 days. That's nearly 23% of its planned December schedule. So despite all of this chaos, the stock did manage to hold on to some gains earlier in the day. However, it has slipped back to the red. But remember that in the past 5 days or so, the stock has gone down more than 13%. So it's a pretty decent recovery we are seeing. This while investors are watching the regulators move. Now remember, DGCA had issued a show cause notice while Indigo has submitted its response. The Civil Aviation Ministry has begun a full inquiry into cancellations. Brokerages have also turned cautious. Now if we talk about the action coming now, in Parliament, Aviation Minister Ram Mohan Naidu said that the government is closely monitoring the situation, disruptions, and also, however, they are now stabilizing. But lastly, a very important comment coming from the Prime Minister. Union Minister Kiran Rijiju has added that Prime Minister Modi has directed MPs that passengers should not suffer because of these operational issues. So yes, that's the latest that we are picking up from the aviation sector.
All right, so that's the latest coming in as far as Indigo is concerned. Indigo that has been marred in this issue was, for the past few days. But let's move on to the next counter that is in focus, that is JSW Steel. Now, November business updates are coming in. Consolidated crude steel production stands at 24.39 lakh tons. That is up 5% on a year-on-year basis. The capacity utilization for Indian operations is at 84%, and Indian operation production stands at 23.61 lakh tons. That's up 5% on a year-on-year basis. As far as JSW Steel USA Ohio is concerned, the production stands at 0.78 lakh tons. So on the back of its operational updates, JSW Steel is in focus today right now, reeling under selling pressure of 0.5%.
All right, so that's JSW Steel for you on the back of that November business update that the company has shared. But let's move on and get you an update from the chemical space. Osho, you've picked out Coromandel International for us, and it's trading just about, managing to hold on to that green. And it's been volatile, especially on the back of those India-US trade talks that have been underway. But for now, where do you see the chart structure headed?
Technically, the counter has seen very strong resurgence from the 200 exponential moving average, which was near about the zone of 2100, and from there onwards there has been some kind of positive movement that has been seen in the counter. So I'm expecting that with the current consolidation around 2300, there is possibility for the counter to give a very strong breakout. 2400 is a threshold point for Coromandel. Any breakout above 2400 can provide very strong momentum in the coming period, and on a very short to medium term perspective, 2650 to 2700 will be the target that one can expect in the counter.
All right, so that's about Coromandel, but let's move on and get you the latest on Siemens. Now, this one is in the spotlight because its board has approved the sale of its low voltage motors and geared motors business to Innomotics India for a price of about 2,200 crore rupees. Now, this is a cash-free, debt-free slump sale already approved by the board and is expected to close by June 2026. The business being sold mainly designs and sells low voltage AC motors, customized motor ranges, services and also spares. It operates largely as a sales driven unit with outsourced manufacturing, and hence that's a key reason why Siemens said the business has low synergy with its core operations. On the other hand, the buyer, Innomotics India, is a subsidiary of Innomotics GmbH, which itself sold globally to KPS Capital Partners in 2024. This deal has been arrived, the deal value that is, following negotiations and two independent valuation reports as well. Now, just for context, to take you through what this could really mean, first up, let's see what the management has said. That they say that the sales ensure continuity for customers and employees, while also allowing Siemens to focus on higher synergy, high growth segments. So yes, that's the latest on Siemens. However, the stock has given up some of those morning gains and is currently trading in the red.
All right, moving on then to the next counter that is in focus, and that is ICICI Bank. Now, ICICI Bank is set to acquire 2% stake in ICICI AMC ahead of the IPO from Prudential Corporation for a consideration of 2,140 crore rupees. Now, the objective of this acquisition is to maintain bank's majority shareholding in the of grant of stock-based compensation by ICICI AMC, and on the back of this, ICICI Bank is in focus today. Right now, it's trading at the lowest point of the day. It is trading with cuts of almost 1% in trade.
All right, that's ICICI Bank, but let's move on and put the spotlight on the pharma space. Also, you've picked out Glenmark Pharma for us, holding up pretty well, 1.5% of gains right now in an otherwise weak market. Do you think this strength to continue in the week to come?
Overall, this counter has given a breakout around the zone of 1900 in last couple of trading weeks back, and from there onwards we have seen some kind of positive movement in the counter. And again, after the recent correction in last two trading sessions, the counter has retested the neckline zone, and from there onwards it has again started gaining traction. So in the short term perspective, I am expecting that the support zone of 1880 to 1900 should be auguring very well for the buyers, and one can look for buying opportunity in Glenmark. On the higher end, 1980 to 2000 remains first hurdle or first resistance for the buyers, but once it breaches the zone of 2000 on a decisive manner, then from here onwards one can expect another 200 points of rally in short term perspective. So one can look for accumulation in Glenmark at current levels.
All right, with that, it's time for us to slip into a short break. Don't go anywhere after the breather. We'll come back with more stocks. Stay tuned.
Welcome back to ET. Now you're watching Market Fatafat with me, Kanishka Sarkar, and Ankita Saxena. Well, now let's put the spotlight on PhysicsWallah, and this one is in the spotlight today after reporting a very strong set of numbers for the second quarter. Revenue has seen a jump of 26% on a year-on-year basis, and the company did swing from 127 crore rupees loss last quarter to a profit of 69 crore rupees. EBITDA has also risen 38%, with margins improving to that 21.7% level. All of this showing solid operating discipline. The growth is being driven by a sharp rise in paid users, which is now standing at 3.62 million thanks to both online transactions and also rising offline enrollments. PhysicsWallah is also reducing its dependence on JEE and NEET, with fast growth coming from state boards, foundation classes, civil services and government exams, it says. Expansion continues nationwide, especially in South India, with 13 new centers, and the company has strengthened its UPSC presence as well by acquiring 40% stake in Samarth IAS. So yes, that's about the very strong results. In fact, the management does expect full year profitability in FY27, a strong H2 FY26 momentum as well, and offline EBITDA turning positive. So yes, that's the word coming from the management. And as Q2 profit did climb 70% on a year-on-year basis for PhysicsWallah, we caught up with the management, Pratik Maheshwari, the co-founder and whole-time director, to understand their goal and the outlook going forward.
Q3 you will continue to see PAT profitability. You will see upwards of 20% of EBITDA of that quarter, which is like 15% this year for second quarter. This 15% number will go to 20% Q3. So overall, the entire year picture, there will be a solid growth in top line and significant growth in bottom line. That will be a substantial profit for FY27. That is what we are planning for the next year. And our nature of the business is the next year planning starts well in advance, because the first and the second quarter of any year where the maximum admissions happens, the Q3 is the most profitable quarter for cycling business like us. So next year we will have a substantial profits in terms of overall year. Next year will be a unique year where our offline, the entire offline business will also turn EBITDA positive. So this is also another plan that which we are charting out at this point of time. Overall EBITDA level profitability in our offline segment as well.
All right, so that's the management of PhysicsWallah, but let's move on to the next counter that is in focus, and that is GAIL, on the back of a note by Citi that is reiterating a buy call with a target price of 205 rupees. We feel that the risk reward has now turned favorable, especially for investors with a medium term horizon. They are unsure if GAIL would choose to contest the tariff order, and they see reviving fears of policy uncertainties for the Indian oil and gas sector. But the stock correction has now largely discounted the regulatory uncertainty. Tariff flow through and the extent of the earnings benefit are the key trigger for volume growth, recovery in key sectors, plus the contribution from new pipelines. So on the back of that, Citi is maintaining a buy on GAIL, and on the back of that, GAIL is trading up 0.5%. In fact, it is sitting at the highest point of the day.
All right, so that's GAIL for you at the highest point of the day right now. But Osho, you've picked out another one from the chemical space, GNFC, holding out very strong, more than 2% higher right now. Where do you see the charts headed from here on?
Technically, the counter has seen very strong momentum. It has emerged above the short-term moving averages with a very strong candlestick formation on the daily chart. So I'm expecting that, looking at the recent development after consolidation, the counter can see some kind of positive momentum towards the zone of 530-35 on a very short-term perspective, and even a breakout above 535 can reverse the trend towards bullish sentiment. So I'm expecting that short-term 535 will be the target, and if there will be any continuation above 535, then we can see a continuation towards 610 to 620 kind of a zone.
So that's about GNFC. But now let's put the spotlight on some of the rice stocks, which are actually under pressure today after US President Donald Trump has signaled that he may impose fresh tariffs on agricultural imports, specifically mentioning Indian rice. Now, Trump did claim that US farmers are struggling due to alleged dumping of cheaper rice from India, Vietnam and Thailand, and said that he would take care of it, triggering immediate market reactions. Shares of KRBL and LT Foods, they tumble as much as 7% in early trade. However, they have recovered from those levels. In fact, KRBL has moved to the green territory right now. However, now the company has said that its direct exposure to the US is limited, so any financial impact would be minimal. That's for KRBL. On the other hand, we have LT Foods, which is more vulnerable. North America actually contributes 46% of its revenue, and its brand dominates the US basmati and jasmine rice market. Now, all of these developments just ahead of the USTR delegation talks in India on December 11th and 10th and 11th, where tariff issues will be discussed. These are coming then. And with the US already imposing a 50% duty on Indian rice, the threat of additional tariffs has put these rice exporters in focus, and they were reeling under pressure earlier in the day.
All right, so that was the last stop for the day. Osho, thank you so much for taking the time out and joining us on the show. With that, it's a wrap on this edition of Market Fatafat. Kanishka and I will take your leave. Thank you so much for tuning in. Don't go anywhere because closing trades is coming up next.